Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining. It's very much appreciated. And in today's video, I'm going to be showing you two of the most important charts that you need to keep an eye on for the next 2 years until the end of the current bull market in 2025. A lot of people ask about another major correction before we get to the halving and the level at which it could possibly go down to, and people are giving so many different targets. And I'm going to show you one of those two charts which predicts that the price isn't going to go below a certain level. I'm also going to go through the 60-day cycle to show us in the shorter term, i.e. in the next few days and weeks and months, exactly what the Bitcoin price is trying to do according to the cycles that we follow. And a question I keep getting asked, because we do the Bitcoin Miners Club here and people are not aware of what the leverage play is with the Bitcoin miners. And I will try and explain in simple terms exactly what that really means. So if that sounds interesting, then you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, the first of the two indicators that we need to keep an eye on over the next 2 years is this one here, the EMA Ribbons on the weekly time frame of this BLX chart. So what can we make out of this particular chart? Once we had a breakdown of the bull market at this point, back in June 2011, having come down in this bear market, gone through below all these EMA ribbons here. So what happens is that as we've bottomed out, it comes out above the EMA ribbons, as you can see here. And the final time it comes out, which is this point here, if you look at the price at this point, you can see that the price never comes back to anywhere near these levels until we top out at the end of the next bull market, which is going to be here at the end of 2013. So this is the pattern that I've identified as one of the key areas where once you get out of the EMA ribbons before the halving here, the price never goes back to the point where it breaks out of those EMA ribbons. So if we have a look at the second halving that we got, similar thing happened. One more time, we'd got to the top of that bull market here, and then we went into this bear market, fell below these EMA ribbons. We tried to get out here, failed. Eventually, we got out at this point with this green candle. Also note that this green line, which is weaving itself, is the 200 simple moving average. And the price came and hit that right over here and bounced up, and right over here and bounced up. So it basically made two contacts with this line. And then when we eventually got up over here before the halving, as long as it doesn't fall below the halving, so this candle broke out above the EMA ribbons in October 2015, which was 9 months before the halving here. So for the next 9 months, it never went below these EMA ribbons. And that was the catalyst for the market to keep on going until the end of that bull market in December 2017. And if we have a look at the last cycle, once again, we topped out at the bull market at 20,000, came back down, went below the ribbons one more time here, 200 simple moving average. And at this point, we came out of those ribbons. But as you can see, with the COVID situation here, we fell all the way back down one more time. But notice that we hit the 200 at 2 points one more time, just like the previous cycle. But before the halving, we managed to get back above the EMA ribbons here. And that price at the bottom there, at the top of the ribbons, was 7,900. And you can see the price never came back down below those levels, or even close to those levels. And if we move to the current cycle, exactly the same pattern is playing out one more time. And that is that we topped out here at the 69,000. Just like before, we've had a bear market, went below the ribbons here, came back out, and just like in previous cycle, came back below the ribbons one more time here. But also notice the green line. We went below the green line for an elongated period over here once, and here twice. But look what's happened recently. We've broken above the EMA ribbons one more time here, and we're about 6 months away from the halving. So just like in previous cycles, we broke above the EMA ribbons many months before the halving, and with a high degree of probability, we won't go below these ribbons one more time, But obviously, we've got to keep an eye on this. And if we do go below these ribbons, then we know that it's going to come back up one more time as based on the historical perspective. And where we break up above that, that'll be our minimum price, that the price isn't going to get back below that if the historical context is to carry on in this cycle. So what is this price that it's broken out of? Clearly the green line, the 200 simple moving average, we've broken above that here as well. And the top of the ribbons, when it broke out, was at this point here, 27,800. If we call it 28,000, based on the historical context, the price for Bitcoin shouldn't come back down now below this level at 27,800. So this is really the bottom price now. I know a lot of people still waiting for the price to be crashing all the way down back to the 25 level, maybe even 20,000 level. Of course, the possibility is there. All I'm doing is looking at the historical context and trying to make sense of that in terms of the probabilities. And so far, in each of the cycles before each halving, the price has gone above the EMA ribbons, but not come below it for 3 times in a row. And this is now the 4th time. So only time will tell, but it's something that we need to be aware of. And while I'm expecting the Bitcoin price to be rejected either at the 40,000 or the 50,000, this has been our narrative for the last 9 months. So while we're expecting a rejection here and or here, so we could get 2 rejections here, but this is telling us that with a high degree of probability, we're not going to have a rejection all the way back down to much lower than the 28,000. This is what it's really telling us down here. So before the halving, as long as we don't go below the EMA ribbons, we should be okay with the bottom price for Bitcoin for the next 2 years to be around about the $28,000 mark. And as we can see with this particular article here, a lot of people are now targeting this 40,000 mark, which we've been targeting for the last 9 months. And our upper target before the halving is 50,000. But I'm going to move on to the second chart that we should keep an eye on. And this is the Maya multiple. You may have come across it. A lot of people haven't. And what the Maya multiple tells us is that it measures the difference between the current price of Bitcoin and the 200-day moving average. And what the Maya multiple is used to show is when Bitcoin's price is overbought or oversold through time periods. And here it is, the Maya multiple. So the reason why this is important is if you look at these 2 lines here, the pink line here and the green line. So these horizontal lines will tell us when the market has topped out or bottomed out. And the upper line is the Bitcoin price over here. And even though it went down below over here as well, you can see that even if you'd bought here or here, eventually you ended up going all the way up to these levels. So these were still very good times to buy, but certainly this was telling us that these are the best times to buy Bitcoin for the longer term. And this is what we're here for at the Wisdom Bias. We're not here for the short term. And then when it goes above the pink line, like here, this is where the market tops out, which at this point was at 14,000. And then in March 2020, when we bottomed out over here, the Maya multiple also bottomed out. And that was the point at which to climb on board. Eventually, in April 2021, where we topped out, the technical top for Bitcoin was in April 2021. And this is exactly where we topped out one more time here. And once again, this bottom was telling us that this was oversold. But this is where it's really important now, because having bottomed out here at the 15,400 level, we can see that the multiplier here has actually come out of the green zone one more time. And this level here, 2.4, is the critical level. Whenever the market goes above the 2.4, that's when it's about to top out. And currently we're at around about the 1.2 level here. So what we have is plenty of room to go to the upside, to go above the 2.4 one more time. So this point where we're at currently at around about the $34,000 mark still presents a very good opportunity for the longer term, i.e. the next 2 years. Yes, it can top out at 40 and come back down to 28. If you want to wait for that, that's your business what you want to do. But what this is telling us is that it's still got a long way to go for the next 2 years before we top out above the 2.4 level. So I hope you found value in those 2 charts. Like I said, they're really there for the longer term, and it's really giving us a clue at the level at which the Bitcoin price will probably not, with a high degree of probability, not come down to, and that is the 27,800, and we can call that 28,000. So looks to me, based on the historical chart patterns, that we're going to now remain above the 28,000 mark. Okay, moving on to the 60-day cycle. As I've said in the last few videos, we bottomed out here on day 51 from the previous cycle over here. We did have a failed cycle, but eventually we made a right translated cycle, which really ended up confusing everybody. But the fact that it came back down into this level here and didn't come back and retest this higher low from this point, and this is what I've been talking about for the last many videos, that as long as we don't break this level here, we could end up bottoming out in this cycle. But in the middle of that, we made a right translated cycle, i.e. created a higher high from the midpoint of this cycle. And what we're really expecting is that, having now started this new cycle on day 51, the midpoint is over here, around 11th of November. And so far, we seem to be making inroads into going into that mid-cycle. And what I would expect now is to make a higher high from these points. It could be at the $40,000 mark, or it could be anywhere here. So just keep an eye on this midpoint. And you can see I've drawn a little bull flag here, which is a continuation pattern going into this bull flag. We should break up to the upside here. The reason why this is looking bullish is because when we made this big move up here, if there was a fake out, it would normally come back very quickly and retake at least 50% of those gains by bringing the price down below these levels around the halfway mark. So the fact that we're still hanging around the top end of that big move that we had over here, we can expect with a higher degree of probability to go to the upside here. And these are our targets that we've had since the end of last year. The Pi cycle over here at around about the $50,000 mark, and the RSI MTF, the multiple time frame RSI, and that's currently at around about the 41,300. And as the price is going up, this is coming down. The chances are it's going to hit the $40,000 mark. So the possibilities are we're going to get a correction at the RSI level down here, and or, i.e. both can happen. We could then make our way up to the Pi cycle and then have another correction. So there is the possibility of two corrections here. But if the correction doesn't come at 40,000, you know with a higher degree of probability, this is where we're going to get it. And this could be much deeper, all the way down to 31,000 maybe. And the reason for the 31,000 would be that since we had this inverse head and shoulders here, we've come to a neckline at 25, we've stair-stepped up above that level, found support twice here, and we've created another neckline here at around about the $31,000 mark. So we could quite easily come back and retest this 31.5 level before we move on to the next target at 50,000. So this is what the types of things I'm looking at here. And as I've been mentioning over the last many videos now, we've actually come and broken above this level here, which was really the level where it gave us a cup and handle pattern over here. And I said, when we come to this neckline, the chances are we're going to break above it. And we've just done that. But this has still got another day to go before the end of this monthly candle. But it looks like, with a high degree of probability, that we're going to clear this neckline now. And this cup and handle pattern has actually played out. And what becomes obvious on the monthly chart is that if you take the bottom of the market here at 15,400 and you draw a one-to-one extension, which was at the top of this level here at 31.8, and we superimplant it over here from the bottom 24,800, this level here. Once again, the one-to-one extension gives us a target of around about the $51,000 mark. So this has a confluence of that at this level here, which is where the Pi cycle is. So one more time, this level seems to be a very critical level that we're going to be getting to very shortly. So we can see, if we look closely at the cluster of resistance around here, at the next level, that as the price moves higher, we could move to anywhere at the top of this level here at about 42, and to this bottom level here at around about 38. So the next move is really going to encompass this $40,000 mark. It's not well defined because of the bodies of these candles and the wicks that are all over the place around these levels, but it's certainly between the 38 and the 42,000 mark. But as we've seen with the RSI MTF, in the past it's come up to that line and been rejected. So that looks like it's going to be around about the 40,000. And we'll have a closer look at that as time goes on and the price moves towards it. Okay, so I'm just going to move on finally to a question, a do get asked from time to time, and I never seem to find the time to be able to explain it in simple terms. And that is, as you know, at Wisdom Bites, we run a private members club for the Bitcoin miners, which are a leverage play on the Bitcoin price. So people always ask, what do you mean by the leverage play? And I've always explained it in terms of the charts, that when we look at the Marathon Digital Holding, which is one of the major Bitcoin miners, in the last cycle, while Bitcoin went up by about 6 or 7 times, the Marathon Digital Holdings, i.e. the Bitcoin miner, went up by 7, 8 or 9 times much greater than Bitcoin. So that is a leverage play. But what does it mean by leverage play? So this question, which I get asked from time to time, what do you mean when you say you trade with Bitcoin leverage miners? So if I take you to the Bitcoin mined by these Bitcoin miners, and in this case, the Marathon Digital Holdings, the number of coins it's holding is 13,286. And if you look to the right, other companies are holding much, much less than that. And one of my major holdings in the Bitcoin miners is with Marathon Digital Holdings. And the reason for that is that it is holding a lot of coins here. And the reason why this is a leverage play, that over the last 4 years when it started Bitcoin mining, the average price that Marathon Digital Holdings was mining those coins that it's got in custody was around about between $5,000 and $7,000. And currently, the new Bitcoins that it's mining is at a cost of around about $12,000 to $16,000. So the leverage play really plays on the fact that at a fixed cost in the past, Marathon produced each Bitcoin at a much lower price, let's say $6,000. So currently, the price for Bitcoin has gone up to $34,000. So the Marathon Bitcoins that it produced a few years ago are actually up by 5.5 times the current price here. But as the Bitcoin price goes up, let's say the price goes from 34 back to 68, 69, which was the top of the last all-time high that we had in November 2021. So if that goes up to 68,000, i.e. doubles up, the Bitcoins that people are buying here at 34 have gone up by 100%. Whereas the Bitcoins mined by the Bitcoin miners at these levels, they will be up by 11x. Over here. So this is the leverage play, that as the Bitcoin miners are mining their Bitcoin, they're mining them at a much lower price. And as the price of Bitcoin goes higher and higher, there is a multiplier effect because they've got fixed costs at which they're mining those Bitcoins. So while people are buying these Bitcoins at a higher price, they've already secured those Bitcoins at a much lower price. And how that plays out on the charts is that if you look at the COVID situation here, where Bitcoin bottomed out to give you the maximum price increase for Bitcoin. So from the bottom here in March 2020 to the top at 69,000, Bitcoin went up by 17 times from the $3,000 mark here, 3.8, to 69,000. So that was a 17x. While Marathon at the same time, from the same spot here to its top in November 2021, this went up by 236 times. So the Marathon price went up over and above the Bitcoin price by 13 times that of the Bitcoin price. So that is the leverage play playing out in the charts. And this is what we're expecting over here this time round as well. As I mentioned in last week's video, no one knows where the price of Bitcoin is going to be. And I'm not even going to predict that. But the majority of the people, the analysts out there, the types of figures that are branded about is anywhere between 90,000 to 500,000. That's not my prediction. That's the prediction that most people are giving out. The more important thing is that when you do get here, how do you get out? It doesn't really matter what price is going to be here. The more important thing is to get out at the very top. Let's say the price for Bitcoin from where it was before at 69,000, call it 70,000. Let's say this time round it doubles up just to make it easier to 140,000. So the price goes up from current levels where it's at 34,000 to the 140. It's going to give us about 3x there. But if you look at the Marathon price, so from the Friday's close at around 886, if the Marathon price goes above the 84,000, doubles up from there to $160, let's say, from the current price, $160 will give you a 17x. So while Bitcoin goes up by 3x, the Marathon digital price in that time period over the next 2 years is expected to go to a 17x. So can you see the leverage play there? And that's what I mean by the leverage play. And if you're interested in following the Bitcoin miners in our private members club, you can do that quite easily by clicking the join button under any of my videos. If you click that join button, that'll give you the box to be able to join here. We run the Bitcoin Miners Private Club every Wednesday, so you get 4 definite videos per month. So the cost of £12.99 is basically the cost of a coffee per week. If you can afford that, with an opportunity to look at the long-term undervalued companies amongst the Bitcoin miners, as well as doing swing trades, and we currently have a swing trade going with the Bitcoin miners, and as I showed you in the last video, we're around about 11%, 35% up and minus 4% at Friday's close, but it has been as high as 32, 39 and 20, and we're expecting these to be much higher over the next few weeks. And this Wednesday's video, I'm going to be sharing with all the Bitcoin Miners Club members what my strategy will be when the Bitcoin price comes up to our 2 targets here at the 40,000 and the 50,000. And the added complication currently is that while the Bitcoin price has moved higher, the Bitcoin miners have actually moved lower. So one way of looking at it is that it gives us a much greater potential and a great opportunity for the next 2 years to buy at lower levels, but it also creates a headache that the points at which we were expecting to take some profits on our long-term portfolio to come down is complicated by the fact that the Bitcoin miners haven't kept pace with the Bitcoin price in the short term so far. So I'll be discussing this Wednesday exactly what I'm going to be doing when the price for Bitcoin comes to 40 and the 50,000. Okay, so I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe and to turn on the notification bell. And if you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.